Hello, Forex traders. This is Ross with Market Traders Daily. This week, we kind of started off a little bit slow. The market a bit range bound. As you can see, the two black boxes here on the two charts. We're looking at the dollar futures index on the right-hand side and the USD JPY on the left-hand side. But as you can see, prior to today's big bearish candle that you see on both charts, the market was a little bit range bound, bound up, bouncing between resistance and support all week long before we really got a good strong move this week. Let's talk about these two charts real quick. Of course, as I mentioned, US dollar futures index on the right hand side, green shaded area showing resistance near the 97.95, 98.05 level, the green zone at the top of the chart. Yellow zone, 97.80, 97.70 as support, bouncing around in there all weekend long, providing some little bounces. You know, we selling towards the top, buying towards the bottom all week long has been somewhat of an opportunity. This morning, we saw the US dollar near the top early on in the day. At the same time, you look to the left-hand side, and again, during the entire week, we saw the market bouncing around top of that black box, bottom of the black box, pink shaded area, 106.40, 106.65. Top of that, 106.65 is the resistance we were looking at early in the day. By the way, previously, if we zoom out a little bit on that yen chart, you can see that red line on the left, measuring Fibonacci top to the bottom of that red line. Put the 0.382 Fibonacci retracement level at 106.68, top of the pink zone. So that gives a little bit additional confirmation of that as resistance. What's important is that at the same time, when the USD was at the green zone, little black circle there, and the US yen was at the top of the pink zone, little black circle, 106.65, it told us that both were at resistance at the very same time, giving us a fairly minimal risk opportunity to go short. Stop loss was minimal. 106.65 was the entry. Stop loss at the onset of the trade, just about a 20-25 pip stop loss was all that was needed to get into this trade. Then, as the morning progressed, we get some random tweet from President Trump, which sent the dollar falling. Take a look at that right-hand side where the market went all the way from the green zone, again, 97, 95, 98 area, all the way now 97.25 area as it just plummeted on that tweet, which sent our dollar yen just falling. So a risk of about 25 pips, we've now seen 125 pips of profit on the trade. There's the trade going at the very bottom of the chart. You can still see it's active and live. The profit over here on the right shows 127 pips at the current moment on the remaining portion. We've already closed some of the profit on the way down, locking in with the stop loss to ensure we don't lose on the trade. But phenomenal opportunity. Just a real quick peek at it on the 4-hour time frame, and again, it doesn't really change anything I've already said, just shows really what happened up here at the top of that pink zone. Look at that, market is bouncing around here all week long, finding resistance at the 106.65 level, 25 pip stop loss, providing minimal risk on the short, and just a significant fall. Look at the 4-hour time frame on the USD as well. There it was right there. Look at that. The black circle, of course, is where we were prior to the move. Minimal risk there. Of course, if it would have broken, we wouldn't have wanted to stay in a buy anyways. So just a phenomenal opportunity to close out our week with profit.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.